Okay, hello. How you doing? All right. Today I want to talk about the two strategies I use. Okay. I do not use a stop loss. Mm, okay. My stop loss is the balance. Okay. So when the balance runs out, boom, I'm done. I'm out. But fortunately, that's only happened to me once so far. Okay, but it will happen. Don't worry, it does happen. Okay, so the two strategies I use, first one I'll tell you about is dollar cost averaging in, all right? And the second one I use is hedging. Okay, so I'll explain them to you. So first of all, let's have a look at dollar cost averaging. Okay, so with this one, what I look for on a chart, I'm on the daily here. So what I look for is a lot of movement, both up and down, up and down, up and down, up and down, okay? Because then that gives you a lot of places, a lot of resistance, and a lot of support, okay? Because that's very important with the dollar cost averaging in. So what I do, so let's have a look at this one. What's this one? This is the euro pound, okay? It's a pretty good one. That's pretty choppy. So what I do here, I'd look at the daily. Okay. I'd look at then go to the 4 hour, have a look at the 4 hour. Alright, see, you can see across the top here. Okay, that would have been pretty good support on the way down. Okay, and also down here be some good support. Okay, so that's the 4 hour and the hour. Okay, the hourly. Again, we've got some, oh, yeah, I'd say, yeah, okay, that could be some resistance, I'd say, but it's been a while ago. But yeah, I don't know. See, but also we've got all these places up here because this here, through here, that could also be resistance. Again, up here could be resistance. Maybe here there could be resistance, and up here. Okay. So what I do, say if I'm in this trade, I'm on the hourly. Say if I'm on this trade, okay, and I say, oh, okay, it's come down, it's hit support, it's gonna bounce back up, so I take a buy. Okay, so let's put our buy in here. All right, so we've got a buy. Put a buy in. There it is there. Okay. Now, what happens is, as usually happens, okay, it starts to go down, going into a sell, and I'm in a loss. Okay, so what do I do now? Okay, so it's heading down. We're starting to lose. Oh no! Oy. Okay, so what I'd do now is I'd go over here and I'd look for somewhere for some support. Okay, so if it comes down, maybe here. This one could be all right across here. What do you think? Is that a good place for support? Okay, so if it comes down to there, okay, what I'd do, I'd put another buy in there. Okay, but what is also a good thing you have to be careful of is try not to put them too close to each other. Okay, don't put them too close to each other. Sort of space them out. Okay, so if it comes down again and then hits this support, okay, and then it bounces back up, what you could do, if it gets up about halfway here, you could break even, or if you think it's going to go further, okay, you can, then you've got twice the payout, okay. But usually, if it's looking like very iffy, most of the time, just get out, break even, just take it, Okay, that's what I do. I'm not telling you to do anything. Okay, don't take my advice, please. Whatever you do, don't take my advice. All right. That's what I usually do. And then if it keeps going down, what you do again, you got it. So if we're down here this time, again, put another sell, another buy order here. Okay, here's my thing. Okay, that looks like pretty good support there, do you think? Or would you go down here maybe? Oh, come on, we'll just put it there, doesn't matter. Okay, so put another one there, another buy order. Okay, and then again, if it comes down, oh, what have I done here? Okay, then if it comes down, falls through that one, and then it comes down to this support, okay, and then bounces back up, it comes to about back to here, you can get out break even, okay, you can get out of break even. The problem with this one is if it just keeps going running down, you're gonna bust your balance, okay, or you're gonna take a big loss. All right. So use it spare. I don't use it sparingly. I use it all the time, and it works for me. Okay, it works for me. Okay, everyone's different. Everyone feels comfortable doing their own thing. Okay, but this one works for me. This is my number one. This I use this all the time, and I have pretty good results. Okay, trading like this. Because what I do, say I've got three there. I don't know, whatever they are. Okay, what you do after the third one. Okay, say these ones were 0.05. Okay, what I'd do the next one down here, I'd find support. If you can't find any support, let's go back to the 4 hour. Okay, look, okay, so we've got the support there. Where would our next support be, do you think? Maybe down here, this looks like a good spot, this one, what do you think? That looks like pretty good support there, doesn't it? Okay, so what do I do? Put another buy. Put another buy in there. Okay, but this one, I would double it. If those three are 0.05, say, I'd make this one 0.10. Okay, because then if it punches on down, let's have a look, I'll go back here. If it keeps going down and hits that, okay, it's going to be way too hard to try, and for it to bounce all the way back up to a break even. Okay, so if it's doubled it, you just have to come back around here somewhere, okay, to break even, instead of having to get all the way back up to here somewhere, okay, or even back to here. Okay, just shortens the distance. Okay, the main thing with trading, my way of looking at it, is don't ever think about the win. Okay, if it goes in the direction you placed, yeah, good, happy days. Don't think about that. Whenever you place an order, always think, what am I going to do when it goes against me? How am I going to manage this trade? Okay, that is how you should be thinking, or that's how I think anyway. If it goes your way, yeah, good. But always, whenever you place a trade, think, if this trade starts to go against me, what am I going to do? How am I going to manage the loss? Okay, so this is one way of managing the loss. I like to do it this way because, one, it's very basic, very easy to do. All you have to do is identify support and resistance. Okay, because all trading is it's going to go up or it's going to go down. Okay, that's all it is, and it doesn't go down forever and it doesn't go up forever. Okay, so that's why it's good to get the trades that like this. Okay, so that's what I do. So just put your buy in or your sell, okay, at wherever you think you're gonna, wherever it's gonna go. If it goes against you, wait till you get down to the next support or resistance. Put another one, another trade in. Okay, same as the first one. Then if it keeps going down, put a third one. Okay, at the next support or resistance after that. Then if it keeps going against you, which it does sometimes, okay, you put another trade in. But this time you double the pips, double the amount, okay? Then it has less distance to travel back. And then if it keeps going down, you put another one in, another buy or a sell, another trade. You just keep doing that until it bounces back the way you want it to. Okay? So that's I think this one's called it's called dollar cost averaging or something like that. I find it very effective for me personally. I'm not telling you what to do. Okay, just want to give you an idea. Okay, I probably didn't explain it the best, but I think you have the idea. The other one I use, okay, the other one I use is hedging. Okay, hedging's good because it locks in the loss. Okay, but it takes a long time to get out of it. Okay, so hedging. So let's go back here. We've got our, say we've got our sell. We've got our sell there again. Okay, but then it starts to go up. Okay, it's going up above us. So it's going up this way now. Okay, so what you do now, you think, oh, this is getting out of control. This is getting away. So you got your sell order, but it's going up. So what you do, put a buy in. Then this area, make that bigger, then that locks in this loss. Okay, say you're down $1,000. Okay, it doesn't matter. You could go on holiday for 6 months, 7 months, come back. Okay, the market could have moved anywhere, but you're still only at a $1,000 loss. All right, it just locks that in place. So how you get out of this is, okay, so we're up here, we've got our sell and our buy, our hedge. All right, so what we'll do, we'll go up to here. Okay, so I'd say we have some nice resistance here. Okay, so what do I do up here? I'd put a take profit from the buy up here. So that's going to be a take profit. And I'd also put another sell order in there. Put another sell order. Because if this goes up to here, okay, you've got your profit. Say that's $1,000. Okay, so you've got $1,000 loss, $1,000 profit. Then if it bounces off there, see, then if it bounces off that resistance and comes back to here, you can get out at break even, okay, because you've got your $1,000 loss and your $1,000 profit. Or if you think it's going to go down further, okay, you can just write it down to here or wherever you think, and you got your 2,000. You got your $1,000 loss and a $1,000 profit plus another 1,000. So what does that make you? You made $1,000. Okay. But the problem is with this, it takes a long time. Okay, could be talking weeks for it to play out. Okay, and what it does a lot of the time, I found whenever I get into a hedge, it usually just starts bouncing around in between the two for ages. All right, or it'll go up here, it'll come back down, go up here, come back down. Okay, or it'll go up here, and then it'll come down, and then it'll come out the bottom in your cell. So what you'd have to do there is exactly the same thing, but in reverse. Okay, so when it comes down to the cell, what you do is take profit from the cell, take profit from the cell with probably this support. Okay, take profit of the cell. Then also you'd put another buy order in there. Okay, all right, because then if that, say it come down, went through, fell down, hit that, you've got the profit from the sell, 1,000 baht, no, 1,000 baht, I live in Thailand, $1,000, okay, and if it bounces off and bounces back up to there, okay, you've also got your buy, okay, and you can close it there and you'll break even because of the $1,000 here. This sell would have taken the $1,000, okay. So hedging is a pretty good way to manage risk, okay. Like I said, it takes a long time because there's a lot more dynamics, okay. So what I told you is the very basics, all right. I've only just started doing this YouTube stuff, okay. I'm not giving you financial advice. Please don't follow think I'm giving you financial advice. I'm not, okay. I'm just telling you what works for me, okay. I have, okay, I win more than I lose, so that's the main thing, okay. Just try and win a couple more than you lose, and then you can call yourself profitable, I suppose. Again, main thing I can't tell you enough is whenever you place an order, okay, how are you going to manage the risk? Okay, how are you going to manage the loss if it goes against you? What are you going to do? Okay, I use these two strategies. What was it? Dollar cost averaging in and hedging. Okay, I don't use stop losses because I find that most of the time the trade goes against me at first, but then it usually turns around. Okay, so if I put a stop loss in, I'd probably just get wiped out all the time. But then again, if you do this, sooner or later you are going to lose your whole balance. Okay, so only put into your wallet or whatever you want, however much you think you can afford to lose. Okay, but it's pretty good, this one. I like these two strategies. They work well for me, and um, I'm still in the USD JPY, and we'll see how that goes tomorrow, and I'll post again tomorrow and tell you how I went. Okay, so that's it. All right, cool. Peace. Have a great day, and I'll see you all later on. Okay, thank you. Bye.